Hey there, YouTube family. Well, we've got a lot going on in the markets. Crypto's been relatively flat today. It's continuing to move sideways. And in my view, it's yet to confirm that next leg up to 34K. It's right underneath those crosshairs I gave you guys recently. So we do not have a bullish confirmation on the day, and it was flat. Markets were basically red or flat, and yet again on the S&P 500, it was big tech that was still green, except for today there was an outlier, Apple stock. What does it mean when Apple stock doesn't go up and the rest of big tech does go up? It closed around 174. It's coming off of a recent prediction that I gave that it would hit as high as 176, but now we're pulling back. We've got to watch Apple because, as I've said, it might be a signal that the markets are going to reverse. We got to see if it continues to sell while big tech moves higher. The price point that is critical that you guys have to watch is beneath 168 bucks. I believe that if we stay above 170 where we're at, the markets are likely to continue to go higher. But if we see Apple fall beneath 168 and stay beneath 168, it might be an early warning sign to get out. It's clear to me, and I've made this point on a number of recent videos, without the emergence of artificial intelligence, there is not a doubt in my mind that these markets would be in negative territory right now. The only thing that has supercharged the markets in 2023 has been AI. It definitely is the reason that big tech has been moving higher, and I have said that it maybe is a recession killer. But even if it's not a recession killer, for sure it's at least a bear hunter. And if you've been a bear in these markets, you've been getting skinned alive. It's been very painful to be in any position that's gone against the markets. I've been warning about the fact that we're in a bull run right now, not just a bear market rally. And today the markets continue to confirm that. I'm going to be covering a couple bull stocks that are moving higher. And I'm going to give you guys a critical prediction from a couple of big investment firms on where the market might be heading in the days ahead. The market, though, we know one thing for certain, that it believes that the Fed is bluffing. The market's pricing in interest rate cuts, but the Fed is saying he's going to hold 5% for the remainder of the year. And here's the problem with that. Once we get to the place where we're faced with reality, the market will correct at that point, and that will be a correction to the downside because we're moving up on the fact that the market does not believe the Fed. All right, I got to give you guys a quick update on my friend Poe. Poe could not live with me forever. He's been released back to the wild. It's been a sad day for me because I would have loved to have kept Poe for a lifetime, but it just wasn't meant to be. He has been released back to the wild. It's a good thing. In addition to that, in regards to my schedule, I didn't make a video Saturday or Sunday. I didn't make one Monday. I've got one out here coming out today, and tomorrow I'm going to be going live with the Core 4 on my page, and I've got some other great videos planned for you guys, but I'm tied up in some business meetings in regards to the businesses that I own. I haven't had to give them much attention because I've got great leaders in those companies, but I'm needing to focus on them here the last couple days. This is the Stocks with Josh show. Thank you as always for hitting that like. If you need insights, predictions, and great charting on stocks and crypto, then hit that subscribe and that YouTube all notification bell. Let's quickly cover Google. We have to acknowledge that we hit the price target that I gave you guys when Google was $122, $123. I said this thing is going to $127, and today we got $127.05, and then it slightly sold off. We gave that prediction when it was 122 and we hit it today. So we're done with that target. The big question then is, what do we have to do next? Do we stay in Google? Is it going higher? Well, I'm going to give you guys where I think the deciding line is going to be decided. We want to see Google close back above 126 bucks. If we're beneath 126, I believe that we could continue to move lower. But if we get a close back above 126 on the daily and even the weekly, I believe that will confirm the next leg up for Google all the way to 135 bucks. So it's just that simple. If you see Google stock above 126, Remember that I told you guys it's going to 135. We can watch it together. Before I get into Tesla and some exciting news around Tesla, and then I'm going to give you guys my overview on the market and what I think is going to happen ahead, let me quickly take a station break. If you need better trade tools, there is a limited time offer, an exclusive offer for the Moomoo investment app. If you open and fund an account, you can get up to 20 free stock. Click on the link in the top pinned comment to get all of the details. They've got 8 order types. They've got all the stop loss orders that you need to protect your investments in difficult markets like we've got right now. Plus, I host a chat group on the app called Stock Josh Fam. Get your free stock. You can start investing, and then you can come find us over there. Okay, let's get into Tesla, and then we're going to talk about what's going on with the overall market at the end. Why did Tesla stock pop today? Well, one, Josh predicted that it would. I told you guys when we got in at 153 that we were likely to get up to 183. But more importantly, Ford came out with their investor day today, and it caused their stock to pop, and as well as Tesla. And I think it was a affirmation of Tesla. It was a sympathy bump for Tesla, but I'm going to break it down a little bit as to what I think caused it in particular to push up. The bottom line is that Ford came out with a very bold and ambitious plan to grow and to increase their number of EVs that they're going to manufacture. They said that they were going to manufacture 2 million by 2026. And what I think happened with Tesla is that this confirmed to the marketplace. One, it was great forward guidance for EVs. It suggested that there was a high demand from Ford for EVs and that they were going to try to go into high gear to meet that demand. And that's a confirmation of what Elon was saying. Elon was saying there's high demand. All of this led to Tesla getting a nice bump today, up around almost 5%. And if we go back to my last prediction, I said that Tesla needed to close above 176 on the daily chart to get a confirmation move up to $183. We got that close of 176. So we were set up well for this move no matter what happened. Ultimately, I believe that it has actually confirmed a move all the way up to 193 to 194, which would be simply reaching the top of the descending channel that I showed you guys weeks ago. We've moved from 153 all the way, I think, ultimately to around 192 to 194. We have to see what the final price will be. We can overshoot that range very easily. I actually knew the minute that we broke through 164 successfully that we would be getting this high. This is just going level by level, though. There's a very strong possibility, though, right now that we're going to backtest some of the lower ranges that had previously been resistant. That's a very healthy thing to do. We want to see this move up be digested. It gets digested by a backtest to at least 183, and it could even backtest all the way to 176 and remain in a bullish move. If we come back and bounce on either one of those levels, we'll go higher. Now, I'm sharing this with you because if you didn't get in and you chose to get in, those would be the levels that I would get in if I were choosing to get in, but I'm already in. Those are going to hopefully become support. But I think we're pushing up to 190. We have to wait and see. In addition to the positive stock price action, something else happened today. Tesla announced that they're going to begin to advertise. And that's a big change for Tesla because Elon in the past has said that he doesn't like to advertise. It's a waste of money. These guys have principally grown the business by word of mouth. But this new phase that we're in, where now they're advertising, they've been cutting costs like crazy, it's clearly an attempt to put some distance between them and the competition. And this is not the type of thing that shareholders like. So even though the stock is moving up, these things present risk to shareholders because whenever you reduce that profit margin and increase spending through advertising, you're running a risk, but ultimately it's all going to be played out and seen whether these moves are the right moves based on how earnings are going to come out in this next quarter. So that's what we're going to be watching for. Right now, the market is giving Elon the benefit of the doubt that these are actually good decisions and that he's going to be getting ahead of the competition and meeting his goals. Obviously, it started off after the last earnings with a sell-off, but now we're clearly giving him the benefit of the doubt and moving back up. And we're going to be around that 190 or higher by the time we get back to earnings to see what they actually accomplish. And it could be setting up for another sell-off again, or they could come out and accomplish something huge. More than likely, it's going to be buy the rumor, sell the news. That's how I'm probably going to be trading it. And in other news for Tesla, a billionaire by the name of Ross Gerber came out and gave an interview. And he was talking about the importance. What he basically said that stood out to me is how important it was that Twitter that Elon hired that Twitter CEO. Now, it's kind of old news, but here's what is new about it to me. One, this guy's been pushing to take a position on the board of directors, and he owns $74 million worth of Tesla. But it just reminded to me of how important of a figure that Elon is. You got to remember, in his last interview, even though nothing was really said positive for Tesla stock, after he did that last interview, basically saying that he would do things without reservation if it cost the companies that he owns money, he would say what he wanted to say, somehow the stock went up. Elon is an extremely important character. The market, the shareholder, wants him focused on Tesla, and the belief is that he's going to go back to be focused on Tesla and that the whole company might be in a good position by this earnings. The market's going to give him the benefit of the doubt. If he doesn't do what the market expects him to do, it'll be a massive sell-off again right after the earnings. Right now, they're assuming success in buying the shares. All right, let's just wrap things up with a little bit of a market overview. Bears are getting slaughtered and the markets are going higher. We know that AI is potentially the recession killer. And if it's not, it's at least a recession postponer. Right now, important stocks are breaking out and they're continuing to operate as bear traps. Bear traps will just cause the bears who are in short positions to have to buy along with everybody else to get out of their short position, which is costing them a ton of money. But here's what I want to point out to you. When you look at the unusual options activity, you see a lot of calls at 4150 and you see a ton of puts enter in at 4200. And so what we don't see is that people are going long on this market. We do believe that people are trading very bullishly with a slight pullback and very bearishly with a slight push up. So it's what that is called is price compression. The market is having price compression, and the tighter and tighter that gets, it often leads to a dramatic moment of expansion, which means that these markets could actually shoot really high up or shoot really low down. And on that note, Morgan Stanley came out and said that they could guess the direction it's going to go, and they said it's going to go down. They particularly said that stocks were simply too expensive right now, that they were trading at an 18.5 times future earnings, and that it was just too frothy. They reminded the market that that was in the upper 15% of the highest part of the range, and that they're looking to sell. And they even told everybody when they were going to sell, that it was going to be based on the debt ceiling. Even if the debt ceiling didn't get agreed upon and it got kicked down the road, or if the debt ceiling was agreed upon and it was resolved, they said either way, on the conclusion of the debt ceiling, they see it as a buy the AI rumor, sell the debt ceiling news. And so we have the potential that even if they kick it down the road or whether they raise the debt ceiling, the market could simply use that as the pivotal news story to sell off. And so the main takeaway is, yes, there's going to be an opportunity in those inverse positions, but the markets have proven to us today that some of these big tech stocks will continue to climb all the way up to the last moment. So just to repeat that, it's buy the AI rumor, it's sell the debt ceiling news. All right, guys, that's all I've got for you today. I've got some other videos planned Wednesday for you guys. Thank you again for hitting the like. Hit that subscribe if you made it this far in the video and enjoyed the content. Go ahead and go over to Moomoo, get that free stock. Find us in the chat group. Peace and blessings, my friends. We'll see you in the next video.